Okay. You are welcome to this tutorial, return on investments. Okay, so this module will take about an hour to complete it, and I will try as much as possible to break it down and summarize it within 3 minutes. Okay, so the topic for today is return on investments. Okay, this model closes out our discussion of discounted cash flow analysis and caps off the course with a discussion of return on investments. So by the end of this model, you should feel comfortable with the notion of free cash flow and the ability to apply a set of forecast drivers to project free cash flows into the future. These are some of the elements of a basic financial model which we will use to come to a decision about the tablet project and to analyze the assumptions behind our valuations. This model has 3 videos. It also has 1 reading and 2 assignments. Return on investment. Simply, when you have a capital or a certain amount to invest in a business, what amount or percentage or fraction do you get back from that investment? That is what we know as return on investments. So the return on investment should always be moderate, average, and not too much. If it's too much, remember, the higher the return on investment, the higher the risk attached to that particular type of investment. The lower the return on investment, the lower the risk factor. So you should always look at what you can afford to risk before you invest in a particular type of business. So this model helps us analyze those discounted cash analysis, cash flow analysis, interest rates, and all. So with all this, you can easily know your returns on investment and know whether to continue another cycle of that investment or to back off. To learn more, come here, subscribe to this channel. See you next time.